Investors and traders, welcome to the channel Market Chat Button. Today is 28th of December 2024. Hope everyone is having a great weekend and the holidays season as it has started, so everyone is having great holidays. As always, this video will be for educational purposes only. It is not a financial advice. We'll be taking a look at the key financial stocks, including the ETFs and the key banks in the United States. So we'll start by taking a look at the KRE. Here we go. So this is the Spider Regional Banking Index ETF, and this represents the regional banks, so smaller banks, and it's been one of the weakest one. Here is in back in March of 2023. This is when the Silicon Valley Bank collapsed, and then there was an intervention which came in from the Treasury and then of course the Federal Reserve, and they injected about $300 billion into the financial systems to stabilize things. Some of these regional banks were actually bought by some bigger banks such as JPMorgan, and what also happened was the Fed actually they changed the rules a little bit in terms of how to account these assets of treasuries on the books for the banks. So basically, they changed it from mark to market, where they had to put on their balance sheet what the asset was worth, the market price is today, versus what they paid for it. So they actually changed it to book value. So which means that if you were to actually let the you let's say for example the institution bought 30-year bonds, bond future for example, or 30-year bond, long bond, a year ago, and they paid 100 for it, but the market is pricing at 90 for it now. So this means it's actually a loss in market terms. But if you were to let it run till maturity, so you will actually be getting coupons, which will be basically the interest being paid to you. And if you were to hold it till the maturity, then you would also get your principal back. So essentially, this was a change made, which means that these institutions no longer have to basically use the mark to market for it. So that changed a lot of things for these banks for their balance sheet. So this is why we have seen a pretty nice rally here. Initially we were targeting about 60 to 63 dollars. We had to wait a long time around here when the market just went sideways, but we stuck with our analysis, and then finally we were able to get to that target. This is the week when the election results came out, and the euphoria in the market actually took us to 78.6% retracement. This is where we have seen a negative candle formation, and for the past 1 week, so 1 2 3 4, excuse me, past 1 month, the market has just moved lower, and now it's right resting at the 20-week moving average. This is where the market pretty much closed last week. So what is really important for us to watch is this market symmetry concept. This is the biggest decline that we have seen. Actually, this one is the biggest one in this entire run up here, and we are pretty much in this ballpark figures. So let me actually grab this one. Here we go. So what it means is that we should be watching the price really carefully, pretty much where it is right here, and between $58. Getting below the 20-week moving average means that it opens up the doors for further pullback, maybe right into this trend line right here, which is going to be the kind of last support in my opinion in this region. And then we could see actually a further pullback. Maybe the market retraces the entire let's see where the entire 38.2% retracement comes in. Yeah, so this is also going to be about around $56 mark, is also going to be 38.2% retracement. Breaking below this, I think we have a chance to move much lower, maybe retrace 50% of this entire move. Moving into 2025, the financials, they do look a bit toppy actually. If we just take a look at the XLF, this is the weekly chart. This is Spider Select Sector Fund for the financials. It also met our target of 49, went a little bit higher. We also had a ABCD completing a little bit higher, and we have actually seen this market pullback, and this is what we had discussed when I did the video on the financials last time. Now it's got a chance that it could actually pull back a little bit further, so because this is the biggest pullback we have seen. But it is also approaching support because the 20-week moving average right here. So we'll just keep on watching it. In terms of the price action, the price action is most likely to remain sideways with the bias towards the downside, but it could happen that we begin to see some rally and it could do a B, C, D right here and then complete this pattern. That is one possibility. So we'll just keep on watching this for the financials. Now let's start by taking a look at some of the individual stocks. So this is going to be the chart for Goldman Sachs. Goldman Sachs has had a fantastic run in 2024. A really amazing run, actually, almost doubled in price. And here, this is what we discussed last time. We were looking for a pullback. This is what the Goldman stock actually did. Came pretty close to the 20-week moving average, and last week actually is a consolidation week, because this week when the Fed came out, there was quite a big pullback in number of stocks, and financials including were hit quite a bit, and it was good to see at least a consolidation come in last week in the financials, or Goldman Sachs in particular. Now moving down to the daily chart, this is what we are looking at. The market has pulled back or recovered 50% of this entire decline. It's also in this area where we could see resistance come in because the price is actually below the 20-day moving average. So the shorter term momentum is negative, and it's right into that spot where we can see further weakness come into the stock, and there's a possibility maybe it tries to make a move towards 535 level around here, which will still be constructive because you see that really nice uptrend taking place since 5th of August 2024, and this is what the market symmetry tells us. This is the biggest move that we had seen towards to the downside, and if it were to repeat, this is where we could get maybe to this trend line as well. So we'll just keep on watching it. If it were to do it, then it's going to be an A, B, C, D kind of formation, getting into this region about 540, 535 level in Goldman Sachs. Okay, getting above this 586 is where things will begin to look more constructive for the stock. Now let's take a look at the JP Morgan. Fantastically run company, but from a technical perspective, it has had a really important level around 255. That is this completion of ABCD with the CD leg extended by 1.618 times of the AB leg. So right here, what it has done is the stock actually pulled back. This is one of the biggest pullbacks that we had seen in the CD leg. It has actually done exactly the same. Right at the support around 225, so a little bit above that, and the 20-week moving average is actually creeping higher as well. So the stock remains supported, which is good. So the real key will be, in my opinion, to keep on watching 225. Because that's the 38.2% retracement. If the stock actually begins to move lower, that's going to be the further indication that something has changed, because it will be breaking the symmetry. It will also be breaking the key support of 38.2% retracement, indicating that we are actually going for a bigger pullback, and maybe towards 210, 208, which is going to be the 61.8% retracement. Now, one of the things about JP Morgan is, I'm just going to show you on the monthly chart. These are really long-term charts going back all the way when this bull market started back in 2009, March of 2009. We have seen some of these really bigger ABCDs getting completed and then being extended. And now on the weekly chart, what we see is basically this key level being hit. So this is giving us one more reason to be more cautious on the stock. Fantastically run company, and just keep on watching the price really closely because of these pattern formations. Now let's take a look at Bank of America. It's been one of our favorite stocks for the banking stocks, and it has given in excess of, let's take a look at let's see, this is where the year started pretty much. This is the low which came in. So over 50% return it has given, which is fantastic in 2024. Of course, the year is not fully over, but we've got only 2 trading days left for the 2024 to conclude. It's been a really fast year. So it is also supported right here. It got this pullback moving into this gap formation right here. So the key is to keep on watching this level around 43, because it's 38.2% retracement, also 20-week moving average. Getting below this means that, okay, maybe we might be going for a bigger pullback. This is the biggest pullback that we have actually seen in this, right into the 5th of August one. So that might be another candidate. We can see the price move back to about $38, $39. Now let's take a look at Citigroup. Not a favorite stock of mine. Struggling right at the 78.6% retracement. Still, it has had a fantastic rally, in 2024. Quite astonishingly amazing in my opinion. But it's not able to take out its highs. It's not able to make new all-time highs. So that tells us something. And if it just begins to find resistance from here, we can see a bigger pullback in Citigroup. Let's take a look at Morgan Stanley. Here you go. So Morgan Stanley hit this 135 level. At one time, I really thought maybe it might be a double top formation right here. But then just broke out and, had a fantastic run right to the 1.618 expansion. It has pulled back for over a month now. I think it's going to remain in this trading range for some time. And then maybe we'll see which way it moves, whether this turns out to be a pretty significant top, or or maybe it just remains range bound like this. So I am more of the opinion for it to remain range bound like this, and if it begins to break below these lows of 16th of December weekly candle, and then further pull back, likely maybe towards this 110 level, which is going to be the structural support right here. Now let's take a look at Wells Fargo. There we go. So Wells Fargo, fantastic rally, because at one time, just like Morgan Stanley, I was thinking maybe it's gonna do a double top formation here. I also had a head and shoulders pattern, but something changed in these financials, in the month of September. Maybe this is the time when the market actually began to realize that maybe the next candidate for the US presidential might have policies which might be favorable for deregulation, lower interest rates. So we began to see a rally in the financials, so really fantastic. It has also completed ABCD 1.618 expansion of this entire bear move. So now really consolidating right here. Because of its fantastic rally, it has a chance to move higher, but I think it might just remain range bound for quite some time. Now let's take a look at MasterCard. Although not a bank, I don't think they have the banking license. It's part of the XLF. Now it's completed this ABCD. It had done the same thing right here, but this one is an extended one. And then for a good while, since March till really late July, it just went nowhere. It had a pullback. The chances are I might do the same thing. So, and it's already doing that. So you can see that for about 1, 2, 3, for 4 weeks, it's not able to take out this point D to the upside. So the chances are increasing that if it begins to break below these candles lows right here, a similar kind of a pullback right here, we could see something similar. So it moves back into around 480 range. That is a possibility. If it breaks below this trend line or the wedge bottom, then opens the door for further pullback. So I don't have any further targets right now. Till it breaks clearly this level, then we could have a $600 mark on it. But right now it looks like more of a sideways to the downside, downward price action. So just watching this from the sidelines, what is happening here. And then if we take a look at Visa. Visa has a similar kind of price action in terms of the pattern, and of course they are in a similar industry, and I think together they have about more than 50% share of the market, which is pretty amazing actually. How much we depend upon these two companies as consumers. So here we go. But I think Visa looks a little bit more stronger compared to Mastercard. But Mastercard has actually been stronger because price is much higher than Visa. Similar kind of price action. I think it's best to just watch it from the sides. If there's going to be a pullback, let's take a look at this is the biggest pullback that we have seen. So, oops. Put it back. Yeah, this is where we go. Yeah, so we could see it pull back right into 290 mark. That remains a possibility, but I think we are going to see more of sideways market for quite some time, just because of these pattern formations and the key levels they are at the moment. Once if it's able to break above that, then we have these higher levels as well. Now let's take a look at the AXP, which is the American Express, a fantastic stock. In 2024 returned really amazing returns, also really at this key level. So there you go, we have these markets which are really at really key levels as we move into 2025 in financials. So this is where I'm more cautious now, just watching a lot of price action from the sidelines in these. I think this is probably the best way to do it at the moment. And of course, if it begins to break these highs, then we have got 343. But looks like it might actually go for a bit of a pullback towards the 20-week moving average around 270 to 280 mark. That is possible. Last but not least, we'll take a look at the Berkshire Hathaway. Here we go. So we'll take a look at the B series, which is more accessible to people. And here we go. So this is, of course, the Warren Buffett's flagship company. It has also done really fantastically well in 2024 and also since forming a bottom in 2022. But because it's also completing these patterns, the really key thing is if it breaks this symmetry here. So these are the biggest pullbacks that it has had is in this CD leg higher. If it begins to break below these, especially this level, this candle around 435, it would perhaps indicate that maybe the characteristic is changing for this entire CD leg price behavior, and then we could anticipate perhaps a move in this ABCD fashion, which could actually take us right here into 360, which is gonna be quite normal because that's gonna be the structural top right here, and I believe that is the 50% move of this entire CD leg, and it's gonna be 38.2% of this entire ABCD, going back all the way to the 2020 COVID lows. So perfectly normal, but it does look like we could be right in the making of a significant pullback in the Berkshire Hathaway stock. And here we go here, and it's also one thing because it's in the news, it's public information that Warren Buffett, he has been actually selling a lot of stock and actually moving into cash. So of course that is going to reflect in the stock price as well, because the businesses are generating a lot of money, but if he's not doing any more acquisitions, he's not adding more businesses into his portfolio. So I think at some stage the price will also begin to reflect that, and that should be okay because it's something which is being engineered. Fantastic stock. Maybe it's also reaching those points that we just begin to look at the stock from sidelines and keep on watching the price action really carefully. So this is what we are looking at in the US financial stocks and ETFs. And if you happen to find this video of educational value, then please do subscribe to the channel, and if you do, then please hit that bell icon button. That way you will know when the new videos are posted. And if you found this video, you learned something out of it, then also please do hit that like button. I will really appreciate that. Thank you very much for watching the video. Good luck, good trading, and speak to you guys soon.